All right, let's get right into it. American Airlines just dropped their fourth quarter earnings, and the market's reaction, well, it's been a real head-scratcher. You've got management painting this super rosy picture for the year ahead, but then you've got the stock just taking an absolute nosedive. So we're going to unpack that puzzle.
Yeah, this is the big question, right? The company puts out this really strong forecast for 2026, way better than what Wall Street was even hoping for. So what gives? Why on earth did the market turn around and punish the stock, sending it down a whopping 7%? Let's break it down.
Okay, first things first, we have to start with the quarter that just ended, because the headline numbers for Q4, this is really where the plot starts to thicken.
So American came in with adjusted earnings per share of 16 cents. Now you might be thinking, hey, a profit is a profit. But in the world of Wall Street, that's only half the story. The real question is, how does that stack up against what everyone thought they were going to do?
And, well, that's where the problem is. That 16-cent profit was actually an 18-cent miss compared to what analysts had penciled in. That is a pretty significant shortfall, and right there, that's your first red flag for the market.
So here's the tale of the tape. You can see that earnings miss pretty clearly. 16 cents in reality versus the 34 cents consensus. Ouch. Revenue also came in a little light, just under $14 billion. Now, management did have an explanation. They pointed a finger at the government shutdown, saying it cost them about $325 million in revenue.
And this really sets the stage for the story management wanted to tell on their call. They basically framed the quarter as this battle between two opposing forces. These major but temporary problems versus a really strong outlook for the future. A classic two-way quarter.
This slide lays out that conflict perfectly. On one side, you have the near-term pain. The government shutdown hit, plus their warning about another big hit, up to $200 million in Q1 from Winter Storm Fern. But then you look over at the long-term gain column and wow, a full-year earnings guide of $170 to $270 a share. I mean, the middle of that range just blows past the $1.97 the street was modeling. That is a bold forecast.
And this quote from the CEO, Robert Isom, just nails their message. He's essentially saying, look, 2025 was tough, we get it. But look past the short-term noise. We've been weathering storms, both literal and political, and we've built a solid foundation to really deliver. So the big question is, how? How exactly are they planning to deliver on that super bullish forecast? Well, it all comes down to their strategy, which you can basically call their premium playbook. It's a laser focus on going after the high-margin travelers.
And they are putting their money where their mouth is. We're talking new jets configured with a ton of premium seats, free high-speed Wi-Fi, but only for their loyalty members, a deeper credit card partnership with Citi, and even going back and retrofitting their old planes to add more premium seats. It's a full-court press.
And the scale of this bet is huge. They're planning to increase the number of lie-flat seats, the most expensive and profitable real estate on the entire plane, by over 50% by 2030. This isn't just some minor adjustment, it is a fundamental shift in their strategy.
Okay, so let's recap where we are. We have a tough quarter that management says is due to one-off events. We have a very strong guide for the future. And we have a clear strategy to get there. Which brings us right back to our original question. Why the massive sell-off?
This chart just tells the whole story of the day. It's kind of wild. At first, the market loved the guidance. The stock actually popped about 4% in pre-market trading. But as the day went on and investors really started to digest the whole story, that optimism just evaporated. The stock did a complete 180 and closed down 7%, a dramatic reversal to say the least.
So here's the bottom line. The market heard two stories, and it chose to believe the negative one. Investors looked at that big Q4 miss, they heard about the operational chaos from the winter storm, and they decided that the risk right here, right now, was more real than the promise of a great 2026. They basically sold the long-term story and traded on the short-term pain. So with all that in mind, let's get to our take. As analysts, we have to look past the noise of a single day and make a call on what happens next. So here's our outlook for American Airlines. We boiled it down to a three-part thesis. First, for Q1, we expect them to come in at the low end of their own guidance. That winter storm is going to sting. Second, we see the stock as basically range-bound, probably stuck between $12 and $15, until management can deliver a clean quarter and prove they've got their act together. And that all leads to our final rating, market perform. That fantastic 2026 guidance provides a nice floor for the stock, but the immediate risks, they're just too big to ignore. And we always have to close with the most important slide.
While this has been our analysis of American's quarter, please remember this is for informational purposes only. It is not financial advice. You should always do your own research.